Now let's take a look at the stock market performance. Equities market closed on a negative note as Nigeria Exchange All-Share Index depreciated by 0.01% to close at 44,604.74 basis points as against plus 1.71% appreciation recorded on Wednesday. Market breadth closed positive as Transcorp led 14 gainers against 13 losers, led by NEM Insurance PLC at the end of Thursday's session. Meanwhile, market turnover closed positive as volume up by 20.81% as against 9.58% negative territory recorded previously. Transcorp, Jay's Bank and Mutual Benefit Assurance PLC were the most active to boost market turnover, while Seplat and MTN Network topped market value list. And to analyze all of this, I have with me in the studio Ambrose Omodion, Chief Research Officer at Invest Data Consulting. Good morning to you.
Good morning. Thanks for having me.
Now, looking at these figures, investors lost over 2 billion naira at the end of activities in the market on Thursday. What are some of the factors driving this sentiment?
Yeah, actually, it's expected that after the market have rallied for almost 8 straight days, seeing a little pullback, it's part of the market. Anywhere in the world, you don't see a market that will keep on going on. Up, they try to pull back to create opportunity for others to enter at a lower price. And what we saw yesterday was just a profit-taking activities, which I said on this program is part and parcel of the world of the market. But don't forget that the market, in these last 4 trading days, has been up for two sessions and down for 2 sessions, which have stated that we expect a mixed sentiment or a mixed market because the first trading week of the year was positive all through. This second week, people are about to take profit. If I made about 30%, 20% in less than 10 days, we are about to take profit. That means what we're seeing is not that fundamental that brought the market to this level or the drivers of the market to this level has changed. No, it's because people are taking profit as part of the market. That means as an investor, when you see this pullback, look at stock that you are not in that has good fundamental. You have to plug in with the opportunity of start pulling because the opportunity is going to continue in just after some days is very high because we're expecting numbers I've said earlier. All those unaudited accounts for for the fourth quarter will start hitting the market from next week to change the face of the market, and also we're expecting the inflation figure or call it inflation figure or call it the consumer price index to hit the market any moment from either today or next week Monday. If it comes, also going to guide. Also don't forget that yesterday this is the first time after like more than 3 months that in the option or what we call a treasury bill option, there was a little increase in the rate from about 5% to about 5.5%. That means almost 50 points that was added to it. That is a sign that those fixed income instruments are gradually catching up. That also attracts funds from other equity market. It depends the outcome of the MPC meeting that will come on next week. That will also give a clear direction where they are going. But for me, looking at what is happening in the market and also the economy, I think it will be too quick for the monetary policy or CBN to hike rate at this point. But if they do that, it will be kind of a negative sentiment for the equity market if they hike rate now. But if they keep the rate flat, that will be what will attract investors to still look the way of equity market. But I believe that because the economy is still recovering, going to rate adjustment in the next MPC meeting, it will be early. But this is the first one in the new year. I think they should give time again to see how the economy will kind of recover, bounce back, or show some of resilience before they can do adjustment. But I know that the World Bank is already calling that you should develop your naira, you should increase your those ones. I said our environment is different from their own environment, and the managers of
you don't subscribe to that.
No. The manager of our economy knows that their economy is different from our own. For that, they know that they are trying to almost the last 8 MPC meeting, no adjustment in rate because they see that the economy is on recovery. If you look at what the CBN posted yesterday about what we call a purchasing managers index, you can see that it's still below 50 points. I mean that the economy is still in contraction. It has not come up. For me, it is too early for them to rush into increasing rate or anything. But I believe that the market is still very heady. If you look at the chart,
what's your prediction or analysis of investors' appetite, considering the fact that the banking sector moved up 0.07%?
The banking sector, even I've said it severally, even on different media, that this banking sector in Nigeria is the most active sector and most consistent in dividend payment in Nigeria. And also, because of the volume they have, traders, both this institutional investor, retail investor, they play easily with those stocks because anytime you want to sell this stock, you're always a buyer. For that is why I see most people want to play banking sector for for trading activities because that is where you can go in and come out in good volume. But that is why you see anywhere in the world, because also the banking sector is the engine room of economy, so that activities in the banking sector also reflect what is happening in the economy. Now that we are seeing that we are recovering, you can see that the banking numbers also are looking good. With what we just saw yesterday from the the Treasury bill option, says that if the rate is slightly going up, it's going to impact the banking sector positively because they play more in that space. The banking must play more in that space. For me, it's good for the banking sector, and we're expecting that most of them are ready to post good dividend at the end of this current financial that ended in 2021 December. That means going forward between now and end of March, we'll see more of these banking results. That also ginger or trigger some sentiment for the sector because when the numbers are coming and they are paying good dividend and we're seeing strong numbers emanating from those the banks, that will encourage more activities in that sector.
So what would you say is the cash cow in the banking sector looking at their earnings?
For me, because they perform, let me say, well, in the last third quarter result, which was almost about 9 months, we have seen their performance. They're only waiting for the last quarter, which is just 3 months for December. And also knowing that this is the festive period for that period, we see a lot of activities in the economy. That also kind of add to the bottom line of the bank because of the festive period of last year. For me, I see the bank result was to maintain that tempo. Those that have grown their top line double digits, and that also do that. Those that also performs flat will also do that. But the strength for them to pay good dividend on the strength of their equity numbers are there. That means as an investor, you look at what they did in 2020 and what they're going to do in 2021. Because if most of those banking sectors have surpassed their 2020 full year with their third quarter, it gives you an insight that these banks are ready to pay good dividend. But also, if there's any policy change between now and they announce the result from CBN, they might say, okay, let's keep more of our earnings as retained earnings and pay less. But if there's no change, I believe that if you look at the payout ratio of those banks before now, I see that most of them will pay good dividends.
So let's look at the direction of the banking stocks, especially in the coming weeks.
No, actually, like the more we go into the year, the earnings season come closer. That means a lot of investors, now that most of the fund managers or have not resumed in the market, only few of them are trading. By next week, we expect them to be in the market or before the end of January to be in the market fully. And they know the volume that they play in the market. And it's only banking sector they can get such volume every day, any day they want to make that volume. For that sector is always active. For that, I believe that, I don't want to mention the name of the bank investors should look at, but I believe that the banking sector is a good one. They should target and take.
So how can investors position themselves for this?
You look at the numbers. Numbers don't lie. We have seen their third quarters result for all. Then sit down and say, oh, you compare the third quarter result with what they did in the previous year, full year 2020 and their third quarter. If the company have surpassed the full year 2020 numbers at third quarter, as an investor, you should ring your mind. Oh, that means if as a third quarter they have outperformed their 2020 performance and they pay dividend of so kobo, that they pay 30 kobo dividend, and as a third quarter that means you are sure that they are likely to grow their dividend from 30 kobo to 35 kobo or 40 kobo. That should guide you as an investor.
All right, let's look at the charter. Let's get an analysis of the chart.
That is why okay, if you look at, as we just said, like market yesterday, we saw that the market and within the week we have seen a 2 days up and 2 days flat, pullback and all that. But the good thing is that market has broken out another major resistance level about 44,338. Now market has gone as high as 44,604. It tells you that market is on the uptrend. And if you look at this rectangle here, you can see that there's what we call resistance and support level here. Market are playing in between this rectangle. You see where it touched here, it came down, it touched here before it touched here. But there's a breakout already. This breakout confirmed that the market is going somewhere. You as an investor, seeing this breakout, it gives you confidence. What you take that, look at the breakout and see the volume that supported the breakout. You now come down here and check your volumes and see that this volume that supported the breakout was higher than the previous one. That is that the volume is gradually coming back to the market, which we believe that by next week, once we'll see more of these investors or fund managers returning back to the market. We might see also a better volume that also guide us. But now that the market have broken out the resistance level with a strong volume and still going up, I believe that the market is staying on that. Because yesterday, we saw that the market still have a positive sentiment. That tells you that investors are still hopeful about the market. That means for me, I would advise that any position you are as an investor, looking at this chart, just hold your position and know and watch the market, because market is always there to create wealth for designing investor. That is the market.
So apparently we're still on a positive trail.
No, very, and very strong.
All right, thank you so much, Ambrose Omodion, Chief Research Officer, Invest Data Consulting. Thank you so much for your time on the show.
Thanks for having me today.